This is Eric Muadhi with Muadhi.com. October 15th, before the market open. Markets are called to open down. The Dow down at about 200 points at the gate. Now, that presents problems always because even if you had some positions you wanted to play, you either have to wait for a pullback so you can get decent prices because you don't want to chase prices at the gap up open or close. I mean at the gap down. And today we are looking at a gap down situation, and some of the bear ETFs that we play are also called up, and that presents again a situation where we have to wait for them to pull back if we still want to play them for the remainder of the day or for the rest of the week. Now, what I'm going to discuss in this video quickly is the back test. You'll see what the Dow did is we had RSI support in the Dow for a couple of I think since the July 15th lows, and then recently coming into October we broke that RSI support. Now what we've done in the last 2 days, we came back and back tested this RSI support line. Now it looks like we are headed lower. Now this does usually tend to be the best time to go short a stock or a market. When you see this backtest fail, then more than likely you're going to see downside pressure. Now because the market is already trading at RSIs way below 30, which is very oversold, it will not surprise me for this market to retest lows that we made last Friday, and we might see increasing possibility for markets to be down again, big chunks at a time. And this is going to happen because we came back, we broke this support here, led to a big sell-off in October. We've come back in 2 days, try to back test this. We hit resistance and now we are headed lower, and we are already in oversold territory. So selling just begets more selling, and people panic when nothing, especially now that the government's come out with all its plans, and if nothing seems to be moving, people are going to panic. And so my thesis is we really have to stay short this market unless otherwise proven wrong. Let's look at the Dow 1 year daily. As you can see, we are stuck in this. For most of 2008 we were stuck in this bearish price channel, and then we dropped to the next level of psychology, which was right here. We tanked, and so we are trading in this psychological level here, which is below this one here. And so there's a lot of built-in fear here. Now it will not surprise me within 1 or 2 days if we go back and test these lows here and probably put a short-term bottom. I don't know. But what I know is markets are looking a little bit weak here. Now what I was talking about is this RSI support here that held since the July 15th lows. We came back, we held, and then when we cracked is when we had this steep drop in the market from around 10,500 on the Dow all the way to 7,700. So a huge drop, almost unbelievable. So we've come back and tested this back test here. We seem to be stalling. Now if we drop down below here, expect people to panic and for pressure to really increase on the downside. Now also keep an eye on the fact that we might be maybe what we are doing here is in effect retesting lows we made in August of 98 around 75.39 on a monthly closing basis. So maybe on a monthly closing basis we might find support here short term. We might clip through that during the month but close above it by the end of the month. That seems to be the next logical support. This support held in 2000 a couple of times, and it also held in the very beginning of 2003, and so now we've come back and we seem to be testing this 1998 August monthly close at 75.39. Unbelievable. Now look at the VIX. This is the VIX. The VIX is still trading in this very steep upward channel, narrow channel, very bullish. We dipped below that yesterday, but we managed to close right on the edges of that price channel support. We have a daily closing high at 69.95. Friends, if we move above this 69.95 on a daily closing basis and follow through, actually if we just even start moving towards this breakout point, which is the highest close in years, this is a classic momentum breakout. Still, this VIX is gonna fly. It's really this is momentum, pure momentum, and these markets are gonna just fall. I mean, you're gonna see tremendous prices on the downside on the major averages, and that's why I say we really do need to stay short this market aggressively. So we've come back, and now we are finding this new support on the RSI. If we move above that and trade in the 68-70 area again, you can expect shorts to be making money in this market. It still remains to be seen whether we break out above this 69.95 daily closing high. If we do, classic breakout. You don't want to get ahead of this train, because this VIX is going to be moving, probably even hit 80, 100 right now. It's possible, because the original VIX, that is $VXO, I think, on stockcharts.com, VXO, hit a high of 100 last week. Okay, now I'm led to believe that the prior high was at 150 for this original VIX, and this was in the, October of 1987. So we haven't seen those prices yet, but for this one, if we break out above 69.95, be very careful. This market is about to drop, and drop very fast in your face, and you don't want to go timing any rebounds until that VIX shows signs of weakening, and it hasn't shown any sign yet. So how do we play this? You can play any ultra-short ETF. I'm gonna wait before I put out this video to members, because the stocks are gonna gap up. I'm gonna just record this video for now, and then I'm gonna, when I feel it's time to get in intraday, we've had a nice pullback, I'm gonna blast this email and video to you, and also send you a phone alert. So if you're watching this, this is the time to get in. And the ETF that I think we should play is